So I get this question asked a lot. I don't know why it's so popular, but everyone cares about taxes is how should I report my online trading income? So since I'm not really an expert in that subject specifically, why not ask the experts, which is H&R Block. So this is an article written by H&R Block, January 27, 2017. So it's over 3 years ago, but you know that if it's written by H&R Block, then it's definitely verified. I tried looking for something similar on the CRA website, canada.ca, but I couldn't find something specific. So here's a few criteria that this article talks about. So if investing is starting to become more lucrative than your full-time gig and you're opting to work from home and have it turn into your new occupation, then you're definitely wondering if it should be considered business income or capital gains. And if you decide that it's considered business income, you could actually be challenged by CRA on the method of reporting because they might consider it capital gains. So what are the factors that they look at to consider if it's capital gains or business income? So let's just talk about first the benefits of capital gains. So if you're reporting as capital gains, they're only 50% taxable. So if you make $1,000 by selling a stock, you only have to claim half of that. $500 gets added to your income. But if you make a trading income of $1,000, then $1,000 gets added to your income. And then you'll be taxed based on your tax bracket, depending on your other sources of income. If you incur losses from capital gains, so if you are investing and you incurred a loss, that loss can only be used against capital gains. It cannot be used against your regular income. If you're working, your employment income, or if you have a business income or rental income. So capital loss can only be used against capital gains. So that might not be too beneficial because you might have incurred capital losses, but the only way you can claim it is if you make a capital gain. What if it takes you a while to make a capital gain? What if you have a high salary from your job and you want to claim that capital loss against your salary to pay less taxes? That's not possible. But if you're trading, on the other hand, and you're considered as business income for your online trading, if you incur a loss in your trading, you can use that loss towards your business income, towards your employment. It doesn't have to be used against capital gains only. So let's say you have a salary. Let's say you work 9 to 5. You have a salary of $100,000, and you're trading on the side, and you consider it as business income, but you lost $30,000. Well, that $30,000, if it's considered as a business income, will come reduce your 100K salary. So you'll definitely end up paying less taxes that year. So generally, if you're purchasing securities as an investment, you should report the transactions on a capital account. On the other hand, if you're buying and selling only with a view to make a profit and you conduct yourself similarly to a trader or dealer in securities, your transactions should be reported as business income. For example, day traders who make all their trading transactions within the same day should report transactions as business income. So how to determine your pattern of trading? So the frequency of your transactions, the duration of your holdings, your knowledge and experience of the stock market, and the amount of time you spend on the activity. So if you're spending 40 hours a week trading or 20 hours a week trading and it's your main source of income, then most likely it's going to be considered business income. But if you're spending 15 minutes a day and you have a full-time job from 9 to 5, then most likely it's not considered your main source of income, so it's not considered business income. So if you're focusing mostly on blue chip stocks, it's mostly considered as an investment. But if you're into penny stocks, these are typically purchased on speculation. So these transactions would probably be considered business income. So here's a link to a complete list of factors that can be found. So the article links to a CRA article, but when you click on it, there's nothing. If we Google IT479R archive, we have archived this page and will not be updating it. So this is an old article on the CRA website, but it's been archived, so I don't know if it's still accurate, but I'll link it below if it's something you want to read. I think the article summarizes it perfectly. So here it says, for example, if you have a high volume of trades, it doesn't necessarily mean that you've got business income if your long-term intention is to build a solid portfolio. So the intention is important. The time spent trading is important. The number of trades you make, if it's your main source of income. How likely can your method of reporting be challenged? So some people might like to claim as business income if they've incurred losses because they can use the loss towards their regular income, either salary or self-employment. But you could be challenged by CRA if you do that. So how likely is that to happen? So an informal survey of Tax Court of Canada looked at cases after year 2000 and discovered 10 cases that had security transactions in dispute. 8 of these involved taxpayers who had been challenged by the CRA when they claimed their losses as business losses. That means CRA wants you to claim as capital gains. One of the cases involved a taxpayer who hadn't reported the transactions under either method, and CRA assessed the transactions as business income without giving very much benefit of the doubt. So this is interesting. So if we look at the number of times that an issue is reviewed by tax court as a reflection of how the CRA assesses trading income, it seems like claiming losses from securities transactions as business losses attracts more attention than reporting profits as capital gains. But obviously this isn't a guarantee, and CRA could change its focus anytime. So this is interesting. When taking a look through your trades, remember that CRA always considers the gain or loss on the sale of short sales to be business income unless you made the transaction to hedge your position with respect to identical shares held on capital account. So this probably relates to shorting shares or selling options. So if you sold options or shorted shares with the intention of hedging against a long position that you have, shares that you have, then it could be considered capital gain. But if you're not using it as a hedge against shares that you own, then it would be considered business income. So obviously we know the CRA started auditing tax-free savings account. They think that it might be used as shelters for trading transactions. When they're satisfied that the account is used to generate business income, then they'll assess tax on the financial institution that the account is registered to, and pretty sure they'll assess penalties to the account holder. But this isn't an issue with RSP, since any income generated within those plan is taxed on withdrawal. So if you're day trading in an RSP, it's not taxed if it stays in the RSP, but as soon as you withdraw from your RSP, it's taxed as income regardless of the way you generated that gain in your RSP. So that's why you could day trade in your RSP, because when you withdraw it, it's going to be taxed as 100% income anyways. So regardless of whether it is business or investment income. So what's my take from all this? Well, there are certain factors to look at. For example, how much time you're spending on your trades, what portion of your total income does it represent, your frequency of trades, are you in and out in the same day on the same stock, and your intention. And it looks like selling options or shorting shares is considered business income if you're not using it as a hedge against a long position. I'll link this article below. If you have any questions, leave them in the comment section below. And of course, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.